All right, it's 4 o'clock. I'd like to call today's Audit and Oversight Committee meeting to order.
Good afternoon. Notice of the public meeting of the Audit and Oversight Committee meeting, April 5th, 2023. Pursuant to Chapter 551, Title 5 of the Texas Government Code, the Texas Open Meetings Act, notice is hereby given that a special meeting of the Audit and Oversight Committee of the City of Brownsville will be conducted on April 5th, 2023 at 4 p.m. at the City Commission Chambers located on the second floor, City Hall Federal Building located at 1001 East Elizabeth Street, Brownsville, Texas, 78520, and via WebEx teleconference meeting by logging on through the city's website. Members of the public who submitted a public comment form will be permitted to offer public comments as provided by the agenda and as permitted by the presiding officer during the meeting. A recording of the meeting will be made and will be available to the public in accordance with the Opens Meetings Act. Chair, it is now 4:01. You may now call this meeting to order.
Sure. Just did. Thank you.
Next item on the agenda, public comment period. We did not receive any public comments, so I will read the next item on the agenda.
Thank you.
Item number 3, items for individual consideration, discussion, and possible action. Presentation, discussion, and possible acknowledgement by Carr, Riggs & Ingram, LLC, the city's external audit firm on city's annual comprehensive financial report for fiscal year ended September 30th, 2022.
Good afternoon. My name is Michael Delman. We've worked together very closely for the last 6 months, and they've done a wonderful job. So I'm going to introduce Matthew.
Thank you, Michael. Good afternoon, members of the Audit Committee. My name is Matthew Montemayor. I'm an audit partner with Carr, Riggs & Ingram. And I'm here this afternoon to present to you your audit report. This will be for your most recent fiscal year, which is September 30th, 2022. I served as the engagement partner throughout the audit. As an engagement partner, I'm responsible for overseeing the audit procedures, including planning, field work, as well as reviewing the report prior to its issuance. Christopher Laird is a CPA out of our Brownsville office. He served as the engagement manager on the job. He's not with us today, but he was responsible for supervising some of our staff during the field work, as well as working to assist the city in composing this audit report for you. It's a fairly large report, over 300 pages long. So what I'll do is my best is to cover some of the high points of the audit report, kind of cover our auditors' opinions that we've issued as a result of your audit, as well as cover some financial highlights. Mr. Delmore will go ahead and cover some of the budget to actual comparison schedules in our RSI schedules as well as cover some of the statistical schedules as well for you as the committee. With that being said, let's go ahead and just flip on over to page 21. Page 21, this is our independent auditor's report. If you wanted to know what the result of the audit was, I would direct you to the independent auditor's report and to read the independent auditor's report. And our main objective of the audit is to render an opinion on your financial statements, whether or not they're fairly presented in all material respects. And the first paragraph there in the independent auditor's report describes the result. And the result of our audit is we believe, in our opinion, that your financial statements present fairly in all material respects for financial condition. We call that an unmodified opinion. You could consider that to be a clean opinion. One of the highest opinions that you could receive as a result of an audit, and something that you as a committee would be anticipating and be wanting to receive as well. In this auditor's report, if you flip on over to page 23, you'll see that we have an emphasis of the matter paragraph. During the year, there was the implementation of a new accounting pronouncement. That accounting pronouncement was GASB 87. Without getting into a technical discussion and a lesson on what GASB 87 is, that basically had to do with leases. Old accounting guidance had accounting for operating leases and capital leases. And with GASB 87, that all went away, and it was one lease reporting model in which you would recognize right to use asset and a lease liability. And if you're on the other side as a lessor, you would recognize a lease receivable and a deferred inflow. Your city implemented that standard during the year. We reviewed the schedules related to your leases and determined that they were appropriate, and the disclosures as well were appropriate for your financial statements. Just to put it into a little bit of perspective, before you didn't have any leases receivable recorded. After the implementation of the standard, you have about $8.3 million in leases receivable. These are mainly results from your airport operations as well as your public transit department as well. This auditor's report further covers some required supplementary information that's included in your report and supplementary information, which includes various combining schedules and individual fund comparative financial statements as well. We've evaluated those statements and determined that they are fairly stated in relation to the financial statements. So all in all, what I would take from the independent auditor's report is that we have issued a clean, unmodified opinion on your financial statements as a result of our audit. There's some further auditor's reports that I'm going to go ahead and cover. These are in the back of your bound copy of the audit report here. If you flip on over to page 305, since you are a government, the audit is required to be performed in accordance with government auditing standards. In accordance with those standards, we report on internal control over financial reporting, as well as compliance and other matters. If we, during our audit, identified any type of deficiencies in internal control that we considered to be material weaknesses, or we identified any deficiencies that we considered to be significant deficiencies, we'd be required to communicate those in this report. The result of our audit, we did not identify any type of deficiencies that we considered to be material weaknesses, as well as we did not identify any type of material noncompliance with compliance and other matters as well. Page 307 is the third and final auditor's report I'll cover. This is our report over compliance. Since your city does receive and expend over $750,000 in federal awards, you're required to have a federal single audit. And you also spend over $750 in state awards as well, so you're required to have a state single audit in accordance with Texas grant management standards. In this report, we do provide an opinion over compliance. And in the first paragraph, you see on page 307 that our opinion is that the city complied in all material respects with the types of compliance requirements identified for the major programs that we audited. So that, again, is a clean, unmodified opinion over compliance, something that you would be expecting and wanting to receive as well. If you just wanted to summarize that all, you would flip on over to page 316. And 316, it just has a basic summary of what I just covered. And on page 316, you'll see that we've issued unmodified opinions on your financial statements and as well as your report over compliance. The major programs that we did audit are listed there on page 316. These federal programs included your CDBG grant program, your airport improvement grants. Those are grants that you have at your airport operations. Your federal transit cluster, those are grants that you receive in your public transportation department, as well as your American Rescue Plan funds that you had and you expended during the year. We also included that program in our audit procedures as well. And the final program that we did audit is the state program, the Texas Auto Burglary and Theft Protection Program. Now, in comparison to prior year, if you look on page 317, we're required to report on prior findings and question cost. And last year, as you recall, we did identify some deficiencies in internal controls. Those are listed there, 2021-001 and 2021-002. Both of those findings that we evaluated during the current year, we considered those to be resolved. So you had some substantial improvement during this current fiscal year as over the prior year. So that's good on part of your finance department. So that covers our independent auditors reports. What I'll go ahead and jump to now is cover a little bit of financial information for you guys. And kind of cover some high-level financial information. And if you can, you could flip on back to page 27. Now, page 27, that starts your management discussion and analysis. Now, I always recommend my clients and commissions and audit committees such as yourselves is to read the management discussion and analysis. That section of the report provides a good broad overview of the entire report. So if you didn't have time to read 316 pages, if you read your management discussion and analysis, you would get a lot of information out of that section. It has information such as financial highlights, budgetary information as well, certain information of the general fund and some of your other major funds, as well as condensed financial information. So I'll go ahead and focus on two tables in this section for you, starting on page 30. Page 30 is your statement of net position. condensed financial statement of net position. And this includes the city and all of its funds together. And you can see for 2022, your total assets for 2022, about 580 million. Those are up from 2021 under your governmental activities, about 525 million in the prior year, up about 55 million during the year. And the main increase for those is attributed to, you did receive a second tranche of ARPA funds during the year, about $32 million in ARPA funds. And you also did a bond issue, 2022 CEO bonds. Those are additional assets, cash proceeds that went into your bank, and that's resulting in some increase in your total assets. Your liabilities are fairly comparable to the prior year. You had 340 in 2022, 340 million as opposed to 341 million in 2021. Liabilities will fluctuate as you increase or issue new debt and as you pay down existing debt. As I mentioned just previously, you did issue some 2022 CO bonds, about 19 million of those, and you paid down existing debt. But one of the main reasons why that was kind of offset. You did have a big drop in your net pension liability and your OPEB liability, which Mr. Delmore will cover when he goes through some of your RSI schedules as well. But the difference between the two of your assets and your total liabilities, you have your net position. Your net position for 2022 was about $219 million at the end of the year. Business type activities, if you slide kind of in the center of that schedule, those are activities for your operations that are similar to an enterprise fund. Those would include your airport operations, your public transit department, as well as your landfill and other operations as well. During the year, you had about 188 million in total assets, as opposed to last year, 175 million, increase of about $12 million over prior year. Now, as I mentioned at the beginning on the leases, 12 million, 8 million of that was result implementing GASB 87. You did have some new leases receivable that were recorded during the year. Your total liabilities showed a decrease about $4 million, 26 million in 2022, as opposed to 30 million in 2021. And the difference between the two was your net position and business type activities, 151 million. So that is a kind of a viewpoint of where you were at as of September 30th, 2022. How you got there, if you flip on over to page 32, that's your changes in net position. Now, your changes in net position, as you can see, for 2022, you had total revenues of 167 million. Those are up from the previous year, 156 million, about $11 million increase over the prior year. Some of the more significant increases, your sales tax jumped about 13.5% during the year. That's always good focus of a city and its economic growth is how we're doing on sales taxes. So your sales taxes did grow during the year about 13.5% during the year. Your expenditures down below 125 million as opposed to 140 million in the previous year, decrease of about $15 million in your total expenses. And the net result of that is your net position grew $47.7 million over the previous year. That is an overview of your city and all of its funds combined into one. Now, if you want to drill down a little more than that, we can definitely do that. If you flip over to page 52. Now, 52, this is your balance sheet, and this is your fund level information, and that's pretty much the focus mainly of city and its operations, is where we're at in our general fund. You budget at your general fund for things like property taxes, sales taxes. You also budget for things like personnel costs if your public safety department, as well as other general government expenditures. And you can see in the general fund on page 52, your total assets of $87.9 million exceeded your liabilities at $33.6 million. The difference of that is your fund balance. Your fund balance as of September 30th was $53.4 million. Unassigned fund balance is $43.3 million. I believe is a city policy to aim for 90 days of expenditures and outgoing transfers in unassigned fund balance. And you as a city are sitting about 113 days. So above that target of 90 days, and a pretty healthy fund balance to have. Page 54 would be your income statement. And that will have your total revenues and total expenditures. Now focusing on the general fund, you'll see that your total revenues, $123 million, and you had total expenditures of about $118 million. Now before transfers, you had excess revenues over expenditures about $5 million. And then after transfers, you did decrease your fund balance, and the net result is your net change in fund balance about $7.5 million during the year. Now, a good perspective to see kind of, okay, this is where we ended up. Where do we think we would end up, right? Then I would point you to your general fund budget. And your general fund budget is included in your required supplementary information schedule. And I believe Michael Del Moore will kind of touch on where you're at in your general fund budget, as where you budgeted and where you're at in terms of the actual expenditures during that. That is pretty much all I have from my input over the audit report. I think I covered some of the financial information of the city as a whole, as far as your total of all your funds combined and statement of net position, as well as some of your fund level information for your general fund. As mentioned, Michael will go ahead and touch on a little bit of the budget to actual. If you have any questions for me, I'd be happy to address them as well.
Well, thank you. I'd just like to thank you for all, and your team for all your hard work here, and also to thank Mike and Lupe and his team and their team for helping work towards a clean audit. And I think it shows the strength of our finance department.
Mhm.
And again, I appreciate everything that you guys do. And I just want to ask, any concerns or additional observations that you have regarding the city's financial performance? Or I know you've issued a clean report, but just wanted to get your thoughts.
Right, that's a good question. So we do have a separate packet that we've issued. This is our required communications. In this required, professional standards require that we make certain communications with members as those charged with governance, which would be, commissioners or audit committee members as well. In this separate required communication packet, I'll go and cover some of these items in here for our communications. If we had any significant difficulties during the audit, we'd be required to communicate those. If we had any disagreements with management or identified any type of fraud, we'd be required to communicate those as well. We didn't identify any types of those issues. During the audit, we did have some audit adjustments that were provided by finance department and their team throughout the audit. Those audit adjustments have been included in this required communication packet. And also throughout the audit, at the conclusion of the audit, management has provided representations to us that they provided us with all the information that we needed to conduct the audit, and that representation letter has been included. And then finally, we did have some advisory comments that we issued at the conclusion of our audit. Those advisory comments are just advisory in nature. We did communicate those with management, met with your management team, and they provided responses to those comments as well.
Said, thank you so much for your hard work. Just to make sure the comments, we find them in the required communications towards is it the back end?
Yes, sir.
I'm looking at it. I just want to make sure it's the very end of the.
Right.
Okay.
Hi again, pleasure to be here. Before we get going, just to echo some of the comments of the people that did the real work. And I'm blessed with a very good staff. We have three CPAs with the city. It's highly unlikely, or you don't see a lot of that in the Valley. Some of the surrounding cities are struggling for people, and here we just have very well-qualified people. Martha in the yellow dress, who stand up, she actually ran the majority of the audit with precision, and this is her second year here. And part of what we talked about was the number of client-prepared entries. Well, Martha and her team reduced the number of client-prepared entries by 2/3, which is very, very significant. And hats off to Martha for the fine work. And Martha is one of the three CPAs.
Thank you, Martha.
And then Lupe, who you all know, he's been here for a time, and he's got such a wealth of experience and guidance to the people. And he was instrumental in the processes too, if you don't mind standing up. So two huge team members that made things happen. And then beneath them, there are a lot of other people that are young and growing and really contributed as well. And I wish you could have seen last week when we tried to finish the audit report. Everybody was working together. It was a singular focus, and I'd never been so happy to see people gel like that. So very, very good coordination. So I'm going to do a few things. I'm going to start on the transmittal letter, which is on page 3. I'm going to then go actual to budget, and then a few statistical things, which I find fun about the city. And we'll make it brief, but we'll try to tell a story here. So if you go to the transmittal letter, it sort of reads like a Chamber of Commerce letter, but there's some really neat economic, financial, and historical things in that letter. In fact, it talks about LNG and their relocating to this part of the country, SpaceX. And one point that I did want to mention that I think is really, really significant is last year we had $522 million of economic development for the city. That is much higher than the prior years. So if you look at the property tax tables, it's increasing, and most of the increase has been in the more recent years. In that transmittal letter, there's reference to the BTX mobility plan, also the West Rail Trail that was completed, the broadband network that we just started construction on last week. And then, as Matthew pointed out, and I don't think you can accentuate it enough, sales tax grew last year by $7.6 million. And what that did, it allowed us to do some one-time initiatives. And then if you look on page 12, the letter of transmittal talks about the pillars of the city, the major initiatives, and City Council developed 6 major initiatives: economic development, planning and zoning, infrastructure, public safety, quality of life, and governance. And in that letter, it talks about what the city did to achieve all 6 of those items. And Helen Ramirez, who was just sitting here, I worked with her staff to develop this letter, and it mentions all of the contributions of last year. So if you have time, please read it. We're proud of the letter, and I think it reads very well, not only historically, but what's to come for the future for the city. And lastly, in the letter, there's a mention that the city has achieved for 45 years in a row the GFOA award. So after this, we'll apply for year 46. So that nice, longstanding achievement for the city. So if you changed or turn to page 41, there's a discussion there, a chart of actuals versus the amended budget. And you look at revenues, that's where everything starts, right? We had 123.6 million versus the amended budget of 106.4. So we surpassed by 17.2 million or 16.1%. So when you achieve revenue and surpass it, it makes the expenditures, your ability to actually fund them. So I'm going to start with property tax. It's slightly under budget by 177,000. But we had the highest collection rate of the last 10 years for property tax. Like every dollar we assessed in property, we don't necessarily get paid. But last year, for current year collections was 97.34%. And Loopy over here reminded me that we're a border town. And when inflationary times and tough periods, people want to hold on to their home. And so we had a very nice collection year in a period of higher inflation. So I think it speaks well for the local citizens. Sales tax, we talked about how strong that was to fund the one-time expenditures, and you look at the comparison versus the amended budget. And I said earlier how much it was over last year, but it was actually 6 million over the amended budget. Very strong year. And it speaks to the economic development that took place in the city. Fees and services, 1.3 million over. And the big drivers there are franchise fees, that was 600K over. And then ambulance service that was 325K area over, causing the bulk of the balance. Under intergovernmental, it's 5 million over. And in that category are grants. And as the news points out, and as we well know, we had immigrant influx funds from the federal government. And so we received $6.7 million last year in funding. And we also had $6.7 million in expense. And that drove the overage on the top line, but then also the overage when you look on the bottom line under public safety. And the way that works is we're actually funded the monies in advance, and any overage goes on the balance sheet as deferred revenue. And so in the year, we recognize an equal amount. And there's 2 types of contractors that we use. One that's contracting for operations, and another contractor that we use for medical that basically does the COVID testing. So when you look at where did the 6.7 go on the expense side, it was to those 2 contractors. The city doesn't have a whole lot of involvement. We run it through the contractors. So a lot of activity, Thank God we have the expense structure to pay for it. And now going forward, the city applied for an extension from April through December for the funding. And we just finished the application the first week of April. So we should know shortly if we're covered for this fiscal year through the end of December. Under license and permits, I love that category because it speaks to economic development. And you looked that it was 749K over. Well, there were 600K in building permits that drove it. And last night at City Council, you heard about Acela and the permitting process. Well, that was responsible for some of the increase. There was 101K in electronic permits, 68K in gas and plumbing permits over budget. And then restaurant had 87K. And really a strong category of performance for the city. You then page down and look at the categories. Miscellaneous is a hodgepodge of things, but that ran over as well. And in miscellaneous, we have insurance claims for TML. So we show the expense when we have like an accident or something in that regard. It'll be down below. But the monies that we get for reimbursement actually goes through that miscellaneous category. We also had some indirect billing back to other funds that ran over budget. And then we received 250K in PEG communication fees from Spectrum that also added to the category. Interest income, you know, back in September of 2021, the 7-day government bond fields that we were primarily invested in had a rate, a 7-day yield of less than 1/2%. Today, I looked it up, it's right at 5. So what you've seen through the last year and a half is this escalating interest income, and that's why performance is above budget there. So the city participated in what's going on. The last category that's huge is PUB, right? And you've got two categories. You got utility services and surplus funds. Well, we don't actually come up with the budget for those categories. We're given the budget by PUB, and then the performance is driven by how they actually do. So on a very nature, they're going to be conservative because they don't want us to be in a position of, you know, budgeting for something we don't have the funds for. They don't actually come in. But I do think they can do a little bit better going forward. We missed by $3 million. That's a lot of money. But again, overall revenue, $17 million above where the amended budget was. And then on the expenditure side, we talked earlier about the immigrant influx funds. If you look down below under public safety and see the $6.8 million negative variance, well, that's the influx coming through on the expense side, paying those contractors, but offset by the revenue. Other areas, culture and recreation was underspent by $1.2 million. There was $450,000 that was allocated for the games at Texas, which will actually come this year. So that's a difference there. Parks and development had $155,000 that wasn't spent, and then libraries had $421,000. If you look at general government, the very top category, it's 3.6 under. Well, a lot of that was driven by departments. Grants was 303 under, planning and redevelopment was 886, and enterprise funds 1.2 under. So sometimes you budget in a year, but not everything goes through as planned, and hence why we had a positive variance there. Moving down on the categories, economic development, 558 under. That's not necessarily a good thing. What the economic development category is for is timing of property tax rebates, the 380 agreement. And so we're a cash basis, how we report cash. So what it meant is that the monies that we had dedicated for the category, the vendors that earned it didn't turn it in. So when they turn it in, we pay it. It's just a timing issue for the year. And then capital outlays, the negative variance there really isn't negative. We don't budget for that category, and it's the fixed asset purchases in the year that go to capital outlays. So all told, at the end of the year, you look at the fund balance, 53.4 million. We budgeted at 41.5 for a surplus versus budget 11.9. And why that happened was basically revenues were stronger than we anticipated. So finished the year in a very good status point. And then, as was pointed out by Matthew, the balance there, that's the 53.4, a large portion of that is not designated. And that's what he was referring to. We have the 113 days of coverage. So ideally, we want 90 days, but anything above 90 isn't necessarily good. The 90 is there in case we have a hurricane or some catastrophe so that the city can get through that period. But anything above 90 should be directed towards other programs. And you'll see when we come forward with our financial policy update in the budgeting period that we'll have mechanisms and strategies for sending those monies over the 90 days to areas that have thought up in advance and planned for. So I am now going to move on to the statistical section and highlight some neat things about the city and some trends there, just for purposes of discussion, and it's sort of fun, but it'll give you some background. If you look on page 284, there's assessed property values, and back in 2013, the values were at 5.58 billion, and in 2022, it went to 7.847 billion. So collectively, over that 10-year period, it was a 40.6% increase. However, if you look at inflation for that period, it was 31%. So take the 41 minus the 31, you're left with relatively 10% of true economic growth. And then you divide it by the 10 years, it's only 1% a year. So the economic development that we talked about in the transmittal letter, that's why it's so important. It's getting better now. But that growth over a 10-year period, when you take out inflation, is really only 1%. And it doesn't help do the things that the city needs to do with salary increases and growth of the infrastructure. So at the end of the day, we're always left with what was our assessed property value. And then Senate Bill 2 that came into play a year ago restricts existing property increases to 3.5%. And then new values, you get to take the whole value. And so that chart on 284, what we plan on doing in the future is showing you a breakdown between commercial and residential, because $1 of residential property is more expensive for the city to support because you have to provide all the services, police and fire. So cities like to have a mix that's sort of half and half. And here we don't quite have that, but it'll show through the ensuing years what our economic development plans do. As we get more commercial coming to the city, those ratios are going to come back, not only where property values go up, but we'll see a better mix of residential versus commercial, more coming in on the commercial side. So a lot of the things that are being done by GBIC and by Helen are going to take fruition, and I think make these numbers much better.
Just out of curiosity, are you going to make a category for like raw land, for example, that doesn't use the same services?
We could put that under the, under the commercial side.
Yeah.
Yeah. Because under commercial, there's really two. There's the property value,
Yeah.
and then there's business personal property, and we could have land split out if that's something that you want. Thank you for the question. The next one on page 286, top 10 property taxpayers. If you go back through a 10-year period, you'll see that who the property taxpayers in the top 10 actually changed through the period. And Helen has a leadership meeting every Monday and Thursday. And at Monday's meeting, I gave them sort of an update on the audit. But I was curious what people knew about the local economy. So I had a dollar bill and I said, if anybody can guess who the top taxpayer for the year was, you can get $1, right? And so there were like 4 or 5 wrong guesses. And finally, Juan, who's in the libraries, guessed Walmart. And I go, you win. and so the Walmart was our top taxpayer. And then you look down the list and see some of the others and you'll recognize names. HEB's in there. And another thing that's I thought shows the trend of the city, there's a lot of healthcare providers in the top 10. So very interesting chart if you get a chance to view that. Next one on page 288 was something that I alluded to earlier, was the collection rate, that 97.34%. You look at the other years, and that's sort of in the middle of the page there. You can see how that was much higher than the other years. And the way it works on this chart is that anything that we collect next year for this year then goes to that blank spot that's in 2022. And so we're always at a year in arrears in how we fill this out. So hopefully we'll get a strong collection year next year, and then that percentage of levy figure that's on the right-hand side will maybe go from 97 to 99 or somewhere thereabouts. But that's what the hope is. And that delinquent tax collections, the city has that contracted out to vendors, so we don't actually get involved, but they handle that for the city. On page 291, talks about debt limit, which is also very important when the city wants to grow and finance projects and capital expenditures and things in the infrastructure. I wanted to point out there that at 48.73%, it's at one of its lowest levels in 10 years. You look at the very beginning, 10 years ago, it was 53.61. So the city is getting a little bit better in terms of its overall debt limit. And if we wish to pursue debt, we have the ability to do that. And that's one of the reasons why our bond ratings are fairly strong. On page 293, there is some very good economic information that I'd like to just talk about a little bit. If you look about a 10-year period back 10 years ago, the unemployment rate was 9.6. Well, now it's 6.4. So a nice, healthy increase in the right direction. And in 2013, only 15.7% of the local residents had a bachelorette degree. Well, now it's at 20.5. So you've had a nice quantum leap in the 10 years. So 1 out of every 5 people has a degree now. And then the median age is 30.9 years, which is a really young city. But you go back 10 years ago when it was also young, those people are 10 years older, right? And so if you look at the chart, it means that we have a population that's staying young. Families are here, they're producing kids, and they're getting educated. So if you're an employer looking to relocate to Brownsville, you're seeing a trend in the right direction, more educated workforce and a young culture. Also with that, though, I did want to point out that the average age here is okay. But then if you look at the income levels, 10 years ago, it was a little bit over 13,000, and then it went to 18,000. And if you do the math, it's a 31% increase, but then we talked earlier at inflation at 30%. So the workforce was more educated, went up 31%, but it was offset by inflation. So they really had a net decrease in real wages. So as we're seeing this economic development with new employers coming in that are paying higher wages to an educated workforce, we're hoping that that mix will get even better. The 18,000 will go up and it'll offset inflation.
Would you happen to know how that ranks nationwide?
It's low.
It's low. It's low.
Very low. Yeah, and I think it's just a matter of the type of jobs, you know, the service jobs. And you looked at our top 10 employers, and you got a lot of retail there. You've got healthcare, which pays a little more. And then the city of Brownsville, the public school district, is actually the largest employer by far and away. So, you know, the majority of jobs are with the school district, and that's what that chart shows. So as we get more manufacturing, more economic development jobs here, I think that wage structure is going to go up. And that's the next chart, the page 295 on the principal employers. And I actually got ahead of myself there, but Brownsville's at ISD's at 6,122. Our city is the number 5 employer. And then HEB is number 6. And PUB, which is a component unit of the city, is number 10. And I know Dr. Gowan was going to try to zoom in tonight's meeting, but I wanted to at least point out to her with her healthcare background, the number of employers in the healthcare industry. Page 300 is really the last chart that we'll look at today, and it's got economic and operating indicators, and there's some really cool trends there, but the one that I wanted to look at was traffic violations. You see, and that's real income to the city, but you see where the violations went down during COVID, and now they're back up again? Some of that is less people being out traveling and going around the city, and it's also might be our police officers not wanting to get out of the car during COVID, but it's now back up, so it's not an issue. And then the thing that everyone looks at is under public works is the asphalt failure repairs. That's huge. I mean, to look at all the work that the public work people did in this last year. And then we were just coming from another meeting talking about the airport. I wanted to point out aviation boardings. The 128,585 from last is up 22.5% from last year. And it doesn't even show Avello Airlines that we recently got the increased business from. So those numbers are only going to get better in years to come. So that's it. Tried to tell you a little bit of a story with the audit. Some of the information in the financial reports are really dry, but this operating section, the statistical, is a good story. I also wanted to say that next year, in working with our audit firm, we're going to get together and talk about things we can do differently for efficiency improvement. We have some software that I think will help automate, putting our mapped accounts from our accounting system into the report. There's better focus, things that we can do beforehand on internal controls. And all in all, we'll aim to get this audit report out to you a little bit quicker next year. But again, hats off to the staff that was outstanding. We work well with the audit firm, and we're just happy to have the opportunity to present to you today to sort of give you highlights of what we went through. And I think everyone will tell you that they're glad the audit is over, but it was a productive period and good people performing it. So we're open for any questions that you may have.
Just out of curiosity, it's more of a just a citizen question. How often do you all reevaluate the budget?
When you say reevaluate.
So I know they vote on a budget at the beginning of the year, the commission, and for example, this year we had a huge change and there was a final budget. I'm imagining this year likely we will not have the same type of growth for permitting, things of that nature because of the economic climate, But that was voted on. When do you all vote on that? It's probably sometime in January.
The budget?
Yeah, the budget.
No, the budget's, it starts October 1st.
It starts October,
So
so.
that process starts now in terms of building the budget.
Build-
I think in the next couple of months, you guys,
Yeah. So to answer your question, now that I understand a little bit better, we get surpluses on sales tax. And even though last year was strong, the first quarter of this year was very strong. It was up 4.3% from the budget or $2.5 million. So the plans are to come to City Council on April 18th with some mid-year budget amendments. And so that will change. But the way we do the mid-year budget amendments is it's sales tax driven, right?
Mhm.
So you don't want to fund ongoing operating needs with sales tax money because it may not be a reoccurring. So we're going to be looking when we come on April 18th for one-time expenditures, things that make sense for the city, try to get council's approval on those one-time expenditures. But 99% of it will not be ongoing operating needs, and that'll be handled in next year's budget. Did that answer your question?
Yeah, I did. Yeah, I did. It was just more out of curiosity, just to see how we're constantly looking at these things or how often we do it.
yeah, I'd just like to, again, thank you for your presentation. It was well done. And I think it's important to recognize how important it is to have a conservative budget. And I think, and try to meet those goals. And I think you guys do a very good job of keeping us in line and making sure we don't get sidetracked here, right? So I think it shows that things are going as planned and there are good controls to keep us in line. So.
And there's been a huge improvement in the audit year over year. Just wanted to point that out, the material weaknesses that were shown last year that aren't there this year. And then, it's open kimono and the advisory comments from them. There's one item that we need to work on, and that's the receivable level for indigent care from the ambulance. The balance goes back a little bit too far. So that's the issue that we'll have to work on next year before we present to you.
Any other questions?
No.
But thank you for attending. I know this was short notice, and we're just trying to meet our reporting deadlines, and I love the questions, and thank you for the thorough wrap-up. And if you leave today and you think you forgot to ask something, just let us know. We'll be happy to answer.
Appreciate it.
Thank you, guys.
Thank you.
We have to vote to acknowledge.
Yeah. So,
Before we do so, Keel, just one thing I'd like to ask you is these internal control findings that were part of the CIR report. If you could keep an eye on them, make them a tickler just to follow up on this, and maybe, a couple months from now, just let us know how it's going.
Certainly, thank you.
all right, with that said, I'll entertain a motion to acknowledge.
Also, motion?
All right, I'll second. All those in favor, please say aye.
Aye.
Aye. All those opposed, say nay. Ayes have it, motion carries.
So the final item on the agenda is adjournment.
I'll entertain a motion to adjourn.
I'll make a motion to adjourn.
I will second. All those in favor, please say aye.
Aye.
Aye. Those opposed, say nay. Ayes have it. Meeting adjourned. Thank you, everyone, for coming. Have a good one.
Thank you.
It is now 4:45. The meeting has ended.